The payments industry moves fast. The economics behind it move even faster. Welcome to On the Wire, a show about the economics of payments, the institutions moving money, and the infrastructure underneath it all. This episode is produced by payware using AI voice synthesis, built from primary research, technical documentation, and real market data. No studio, no hosts, just the content, clearly presented. Let's get into it.
Welcome to today's deep dive. We are pulling apart a comprehensive technical guide from payware today, exploring, a pretty massive shift in the payment landscape.
Yeah, it's a fascinating topic.
It really is. Our mission here is to unpack account-to-account or A2A payments. Because if you follow fintech, you know the legacy card rails are just incredibly bloated. A2A bypasses that traditional network entirely to move money instantly, and it is poised to fundamentally alter how you check out.
Oh, absolutely. I mean, anyone running a high-volume retail business knows the pain of those legacy systems. You're looking at this 12-step process just dragging digital funds through multiple gateways, processors, networks, acquirers.
12 steps just to buy a coffee.
Exactly.
Yeah.
And that chain siphons off like 1 to 2.5% in fees. Not to mention it traps the capital for 2 or 3 days before it actually settles.
Wow.
Yeah, so for a grocery chain processing, say 80 million euros a year, 800,000 euros simply vanish into thin air just to process digital payments.
That is wild. It feels like trying to pass a secret message through a 12-person game of telephone, right? Where every single person demands a tip before whispering to the next.
That is a great way to put it.
So A2A is like bypassing all of that with a direct fiber optic cable. It uses open banking APIs to connect the buyer's bank ledger directly to the merchant's bank ledger.
Right, bypassing the intermediaries completely, which drops the cost to a flat 0.5%, and the merchant sees the settled funds in under 10 seconds.
Under 10 seconds.
Yeah, but that direct ledger-to-ledger connection, that's just the core innovation. Historically, the challenge has always been the consumer experience. I mean, wiring money directly used to mean memorizing routing and account numbers.
Which is entirely useless when you're standing in line.
Right, nobody is doing that.
Yeah.
So the new initiation process takes that technical burden completely off the user.
Well, let's look at how that initiation actually happens, because the payware guide outlines some wildly futuristic methods. Obviously, you have your standard QR codes and NFC taps, but it mentions you can initiate a payment by walking into a Bluetooth low energy zone, like pulling into a drive-through.
Oh yeah, or even through audio.
Wait, audio? How does a TV commercial actually trigger a bank transfer?
It's super cool. The underlying technology relies on high-frequency, totally inaudible audio signals embedded directly into the broadcast.
Okay.
Your phone's microphone picks up that specific soundbite, which contains this tiny encrypted transaction payload.
Oh, wow.
Yeah, and that payload uses an API to automatically wake up your default banking app, pre-populating it with the exact purchase amount and the merchant details.
That is crazy.
To simply glance at your screen to authenticate, hit authorize, and the funds move across instant banking rails.
Right, those rails being systems like FedNow, the U.S. Federal Reserve's newly launched instant payment infrastructure, or SEPA Instant in Europe, which processes regional transfers in seconds.
Right.
Now, that sounds incredibly slick on paper, but I have to push back here for a second. Fumbling with a banking app, waiting for it to open, scanning your face. Does any of that actually beat the sheer physical speed of just tapping a piece of plastic on a terminal? Are you genuinely going to adopt this at a crowded checkout line?
Well, the friction you are imagining absolutely used to be the roadblock.
Yeah.
But 3 things recently converged to completely eliminate it.
Okay, what are they?
First, we finally have those instant back-end rails operating at scale. Second, over 70% of people now use mobile banking on a weekly basis.
So the app habits are already ingrained.
Exactly. But most importantly, we have biometric strong customer authentication, or SCA. The phone's hardware handles all the heavy lifting instantly.
Right, which brings up a massive question regarding security, because if we are creating a direct pipe from my main bank account to a merchant, completely bypassing the traditional credit card networks, how is that not a dream scenario for a fraudster?
You'd think so, but it actually creates a nightmare for fraudsters, fundamentally because of how biometric cryptography works.
How so?
Well, when you authenticate a payment with your face or your fingerprint, your phone is not sending a picture of you across the internet.
Okay, it stays on the phone.
Yes, it unlocks a secure enclave on your device's hardware, generating a unique, single-use cryptographic token for that specific transaction.
Oh, I see. Which means there is no static 16-digit card number floating around a merchant's database waiting to be hacked in a data breach.
Precisely. And because that cryptographic token mathematically proves your physical presence, it virtually eliminates friendly fraud.
Right, the classic chargeback dispute where someone claims, hey, I didn't make this purchase.
Yeah, that category alone accounts for 60 to 70% of standard chargebacks.
That is huge.
It is. By shifting to A2A, merchants see a 95% reduction in fraud dispute rates overall. Platforms like payware are building this secure infrastructure into whatever context the merchant needs, completely altering the risk model.
Though, to be fair to the legacy systems, our plastic cards aren't vanishing overnight, right? They still dominate credit-based purchasing and international transactions, mainly because A2A infrastructure is highly domestic right now.
That's true. But every day, domestic commerce is where A2A is aggressively capturing market share. It really transforms the payment from a detached physical transaction into this seamless contextual part of the digital environment.
It is a profound shift in the architecture of how money moves. But as this direct infrastructure helps businesses slash their payment processing fees by 50 to 80% across the board, it leaves you with a fascinating question to ponder.
What's that?
As this rolls out globally, will these merchants actually pass those massive structural savings down to you in the form of lower prices at the register, or are they simply going to pocket the difference?
That's On the Wire, produced by Payware, the transaction resolution network for instant A2A payments. This episode was AI generated from Payware's published research and documentation. If something sparked a question, the full source material is available at payware.eu. If you work in payments at a bank, an ISV, or a merchant organization, and what you heard is relevant to what you're building, reach out. The conversation doesn't have to stop here. Subscribe to On the Wire wherever you listen to podcasts. The next episode is already waiting.